Welcome to our Crypto News Weekly Roundup. Let's explore the key stories that made the headlines in the cryptosphere this week. BlackRock's Ethereum ETF application sparks market surge. BlackRock has shown interest in launching a spot Ethereum ETF, causing Ethereum to spike by 12% as they eye Nasdaq for listing. MicroStrategy's unrealized Bitcoin gain surpasses $1 billion. MicroStrategy is riding the Bitcoin wave, with unrealized gains surpassing $1 billion, holding over 158,000 Bitcoins, and hinting at even more purchases. Bitcoin's resurgence fueled by options market dominance. Bitcoin's recent market surge has been attributed to the BTC options market, which has surpassed the futures market in open interest. Australian Taxation Office expands taxable crypto activities. The Australian Taxation Office has jolted the Aussie crypto space as it extends tax reporting to wrap tokens, decentralized lending, and even liquidity pools. Let's explore all these and more. To start off, BlackRock, known for its influence in traditional finance, has been making serious moves in the world of cryptocurrencies recently. At the moment, the company is not only pursuing a spot Bitcoin ETF, but has now set its sights on Ethereum. BlackRock wants to create an ETF dedicated to Ethereum's very own Ether, marking a significant step in the company's foray into the crypto realm. The iShares Ethereum Trust, BlackRock's ETF division, has been officially registered in Delaware, marking a significant step in the asset manager's commitment to the crypto space. As you'd expect, the announcement had an immediate impact on Ethereum's price. Following the news, ETH experienced a surge, reaching its highest level since April this year at around $2,131, an immediate 12% increase from before the news. Although it has since pulled back slightly, the overall gain since the rally started stands at around 9% as of the time of this video. This kind of market reaction underlines the growing influence of institutional players like BlackRock in the cryptocurrency market. Now, the company has chosen Nasdaq as the exchange for listing its Ethereum ETF, subject to regulatory approval. Also, to ensure the security and custody of Ethereum, BlackRock has partnered with Coinbase, a major US-based crypto exchange. This move is strategic, as regulatory bodies often look for robust surveillance mechanisms, and BlackRock's market surveillance pact with Coinbase could be a game changer. The filing also anticipates potential objections from the US Securities and Exchange Commission, or SEC, regarding surveillance sharing. BlackRock believes that the surveillance systems in place for CME Group's Ethereum futures, which have already received approval from the regulator, can effectively detect any fraudulent activities in the spot market. This argument positions BlackRock's Ethereum ETF as a logical extension of the previously approved Ethereum futures ETFs. So, what does all of this mean for Ethereum and the broader crypto market? Well, if BlackRock successfully launches its Ethereum ETF, it could pave the way for more institutional investors to enter the crypto space. This increased participation has the potential to boost demand for Ethereum, solidifying its position as a leader in decentralized applications, smart contracts, and decentralized finance. Apart from that, some analysts are speculating that if BlackRock is considering filing for an Ether ETF at this time, then it could mean that the company knows for certain that its spot Bitcoin ETF filing will be approved soon. Speaking of Bitcoin, MicroStrategy, the business software juggernaut, is making headlines again as the surging price of Bitcoin propels them into unrealized gains of over $1 billion. MicroStrategy, founded by the crypto evangelist Michael Saylor, has been a vocal supporter of Bitcoin, and their strategic move is paying off big time. With the price of Bitcoin currently coasting just under $38,000, its highest point since May 2022, MicroStrategy's Bitcoin holdings are now valued at a staggering $5.93 billion, up from an average price of $4.68 billion. Now, MicroStrategy didn't just jump on the bandwagon yesterday. Over the past 3 years, they have strategically accumulated 158,245 Bitcoins at an average price of $29,582 each, using company funds and proceeds from bond sales. What's really interesting is that the value of their Bitcoin holdings is equivalent to over 80% of MicroStrategy's $7.1 billion stock market capitalization. MicroStrategy's most recent purchases around September 24 saw them add 5,445 bitcoins to their treasure trove for just under $150 million. That's an average price of $27,053 per bitcoin. Meanwhile, MicroStrategy's Bitcoin holdings are currently more than 10 times larger than the next institutional giant in the crypto game, Marathon Digital. MicroStrategy's stash is worth a whopping $5.7 billion, while Marathon Digital sits at $500 million. But hold your horses, because MicroStrategy might not be done yet. In August, they hinted at the possibility of raising up to $750 million by selling more stock, with plans to use some of the proceeds to buy even more Bitcoin. The recent surge in Bitcoin's price is fueling optimism that the SEC might greenlight spot Bitcoin ETFs soon, which could trigger even more aggressive price hikes in the crypto market. Since the start of the year, Bitcoin has rallied by 119%, effectively doubling in price. Now, Bitcoin has not only doubled in value this year, but is shaping up to be the talk of the town for a variety of reasons. According to a recent CoinDesk report, the resurgence of Bitcoin is attributed to several factors, including increased demand as a safe haven asset, the anticipation surrounding spot ETFs in the US, and dovish expectations from the Federal Reserve. However, the action is not just in Bitcoin's spot and future markets. Apparently, the real game changer is in the options arena. The BTC options market has now surpassed the futures market in terms of open interest. As of the time of this video, we're looking at a whopping $17.4 billion locked in active options contracts, nearly 10% more than futures open interest of $15.8 billion, according to CoinGlass data. Now, what does this mean for the crypto market? According to Multistream, the chief commercial officer of Deribit, a leading crypto options exchange, this shift signifies the maturation of the market. Luke believes that traders are becoming more sophisticated, showing a growing preference for options as tools for strategic positioning, hedging, or tapping into the recent surge of implied volatility. And for those wondering what options are all about, think of them as powerful contracts that give you the right, but not the obligation, to buy or sell Bitcoin at a specific price before a certain date. Bulls use call options, while bears go for puts, creating a dynamic landscape of risk management and profit potential. So why this sudden urge in options popularity? Well, it's not just about betting on Bitcoin's price. Traders can now leverage options to navigate through volatility, market turbulence, and time itself. Whether you're protecting against a downturn or aiming to capitalize on increased market excitement, options provide a versatile playground for strategic moves. Meanwhile, the crypto space in Australia got a little heated a few days ago. The Australian Taxation Office, or ATO, has just dropped some updated guidance on crypto taxation, and it's causing quite a stir in the crypto community. Last year, the ATO made it clear that capital gains and losses from crypto transactions needed to be reported. But now, it's not just about buying and selling anymore. The ATO is now extending its reach to include wrapped tokens and activities on decentralized lending protocols. So what does this mean? Well, according to the ATO, every time you wrap or unwrap a crypto asset, you're essentially triggering a capital gains tax or CGT event. Whether you're diving into DeFi lending and borrowing or just sending your tokens to an address you don't control, get ready to report it. But here's where it gets interesting. The ATO says even liquidity pools and providers are not off the hook. If you're depositing or withdrawing from a liquidity pool, congratulations, you just triggered a CGT event. Also, if a DeFi platform is paying you rewards in crypto, that's another taxable event. Now, this has the Aussie crypto community buzzing, and not in a good way. Critics argue that this move could have a chilling effect on those coming into the world of decentralized finance. They also worry that the ATO could continue to extend its reach and eventually stifle inflows and innovations in the crypto space. However, the tax based on your individual marginal rate comes with a silver lining, a 50% discount if you HODL for a year. But still, the crypto industry isn't thrilled. While the ATO's guidance isn't law, it has got a lot of Australian crypto enthusiasts on edge. It's not set in stone, but it's a sign of where the wind might be blowing. According to CoinDesk, Australia's Board of Taxation is set to review the tax treatment of digital assets, including these new CGT rules by February 29, 2024. That said, we'll have to wait and see what they have to say. That's all for the news this week. If you found our video informative, then please like the video, subscribe to our channel, and press the bell icon to get updates on all our future videos. Let us know in the comments what other topics you want us to cover.